Hello, everyone. Thanks for joining today. I'm David Widmar, providing a little bit of a summary commentary on the latest USDA WASDE report and kind of break down what's going on. I think this is a continuation of the narrative we've seen over the last few months where um, our suspicions about the yield coming in smaller has probably been accurate, but it's been, especially on corn, offset by other factors. So we just haven't been able to put together a tightening of the corn balance sheet because of all the other factors that are playing out. So let's dive into this and let's talk about what's going on here. So on the right side, I put together a stocks to use across the past months, and you can see we've been pretty stuck here in this 15% stocks to use. Um, For context, we were at 10.2% last year, 9% the year before, and a long run average of 13%. So this is starting to see getting towards a burdensome level of inventories. And the headlines were, hey, we had a smaller yield. And those of you participating in the Ag Forecast Network that had probability of forecasts going down, you had good scores. So let's unpack what was going on behind the scenes. Well, first off, using some of that FSA data that the USDA can use to dial in those acreage estimates, you saw that they added about 800,000 acres of area planted. Now, one question that we've been wondering about, probably going to write some articles on here in the coming weeks, is what about harvested acreage? And right now they're sort of using the average, and that could be dialed in, but it's going to take some time before they actually dial in this harvested acreage number. So we could still see some adjustments here, but we're dialing it in. It's still coming in at the big side. As a reminder, I think this is worth pointing out. Right now, the soybean corn price ratio for the 2023 December corn futures and the 2023 November soybean futures is very high, close to 2.7. If you were to look back at that chart, say back last uh, October, November, the ratio was very low, 2.1, 2.15. And that's, I think, part of what it got us to this point that we have a whole lot of corn acreage, just unbalanced between corn and soybeans that we had talked about in some of our earlier writings. Now, here's the story on the yields. We trimmed out some more yield here, but the net impact was actually a slightly bigger productions, a little more production coming through. And then, of course, the other big development, I think worth keeping an eye on, continuing to keep an eye on, the USDA did not change any of the usage categories, but just look at where usage at 4.4 billion bushels compared to basically 15 billion bushels 2 years ago. So we have a situation here. Well, we have more production than 2 years ago, more supply, but we just haven't gotten the commodity usage part of this equation back up. So again, to bring this back full circle, yes, yields are down, and if we only built a marketing plan or a trading plan around that single leg of the stool, we would have missed these other twos that just haven't put together a positive narrative. So more acreage this month, no change in usage, thankfully, but still we're not able to get a tightening of the balance sheet. Still, the USDA has a farm average price of $4.90 a bushel, and we'll see how that dials in. Where does the current 173.8 bushel per acre estimate come in? Well, we're still sitting in here about the seventh lowest yield. It is tightened, but we haven't tightened up anymore. Still about the 20th percentile. So a significant development there. Soybeans, of course, we have tighter yields again for soybeans. We have a 5.2 stocks to use. We were back at 7% back in July, so we've continued to tighten that lower. Again, the long run average is 8%, so we're in a tight situation for soybeans. How does all this come together? Well, we actually saw the USDA trim production, but keep an eye on exports. They also trimmed exports about or 1.79 billion bushels of export activity. That's the lowest we've seen in the last few years. 2.2 billion bushels are where we were 2 years ago. That's part of this usage story. Interestingly, on the other side of the coin, however, is we're still expecting a lot of domestic crushing. So more domestic crushing, a little less than last month's estimate, but still more than last year and the year before. So soybeans have this domestic versus export situation unfolding. Again, we've been talking about this. Ending stocks are now at 220 million bushels, tighter than they were a month ago and considerably tighter than they were the last 2 years. But this stocks to use is a function of both stocks and usage. And so when we have smaller stocks today, but also smaller usage, it kind of doesn't show up in the data as we might expect. The USDA's lowering of the soybean yield estimate is actually a little bit more sticker shock than what we saw for corn. Why? Because we moved soybeans further up the column here. We saw something closer to 31st percentile. We're closer to the 40th percentile last month. So we did move a few spots. We've talked about this a lot. We'll update the data, but this is the error of the various USDA corn yield estimates throughout the fall. And we just got through the September WASDE, so I saw how much error is out there. Well, keep in mind, there's several years where corn has 1, 2, 3, 4, 5, 6 years where corn yields have been off by 5 bushel to the upside, and similar number of years that's been nearly 5 bushel or more. There's still a possibility historically of having a 10 bushel error out there on the corn side. When we move into October, that starts to tighten up, and then finally it's November where we see it really adjust. For soybeans, I always say that the August estimate's really not much different than the trend line yield estimate. So we have taken a little bit of the air out of soybeans here in September, but still 2 bushel air and 2 to 4 bushels worth of air are still possible to the downside. We'll have a lot of tightening into October and November. So all this paints this picture that we still have a lot of uncertainty around yield. We still have to dial this in on the acreage. Again, what we're really looking for here is any signs of life in the usage side, any signs of new life in terms of how can we hopefully capture more export activity on both corn and soybeans and maybe some additional domestic usage. That's all we have for this month. I appreciate all of you participating in the Forecast Network challenge around the yields. We had another great round of participation in September WASDE. As a reminder, there's the October questions and the November questions, and of course the long burn questions that resolve in November but been around since May. Those all get resolved, and we have 6 questions left. So make sure you update your forecast, log your initial forecast. We'll get all that pulled together, and we'll have a final tally for who the winner is. And there's 3 or 4 really good contests. And I think what's interesting here is the USDA has only been lowering yields. And I think even in 2012, we saw a situation where they lowered yields and then had to adjust it. So I think personally, this is one of the hardest parts of the contest because we can all agree that the yields are not going to be trend or even above trend. But the question here is, as we get towards the end of the WASDE estimates, how much dialing in does USDA have do, and does that result in a slight increase at any point? So lots of all of them have been downward revisions. Will there be an upward revision at some point? How does that impact your forecast? Until next time, stay curious.